All right. Well, hello everyone and welcome to today's KiwiTech's Social Impact Venture Fair. My name is Karandeep Sodhi and today's panel discussion focuses on how to make social impact work for everyone, COVID and beyond. Well, we greatly appreciate all of your overwhelming support of this event. As well, we had more than 200 guests from the tech community register for today's event, and it's almost equally split between investors and entrepreneurs. The reason is pretty straightforward. We have a fantastic panel today, followed by our premier startup presentations. Well, I'm joined by my colleague Anya Chabra today, and the two of us will serve as the moderators during the startup presentations. And with that, I'd like to welcome Jessica Chenfu, Senior Director, Strategic Partnerships at KiwiTech, to give a quick overview of the company.
Hi, everyone, and thank you, Karandeep, for the introduction. So I'm Jessica Chenfu, the Senior Director of Strategic Partnership here at KiwiTech, and I'd like to welcome you all to our Social Impact Venture Fair. So for those of you who are not familiar with KiwiTech, we're a global community of innovators, investors, advisors, strategic partners that are passionate about fostering the startup ecosystem on a global scale. Today, we have the privilege of working with over 400 portfolio companies who have raised over 75 million in capital, and we have invested over 100 million in providing them with technology services. Now, our portfolio companies are about 95% US-based, but we are also in Canada, the Middle East, and in Europe. Now, how did we get here? Our startup program launched about 8 years ago, and we've developed and added value in providing support in capital formation through our demo days, accessing quality expertise of mentors and advisors through our entrepreneur workshop series, and are on track in reaching in 3 years over 1,000 portfolio startups. There we go. And so how does our model work? Within our startup program, we have an option for the US startups that qualify to provide technology services in exchange for both equity and cash payments. So as you see in this pie chart, if you have an offshore technology service need of about 500,000, then we would take over about 250,000 in equity, and then the other 250,000 in payments. Our ecosystem evolves a variety of events depending on where you see and have interest in value, from an industry perspective to connecting with fellow entrepreneurs, to our demo days and our family office and venture capital panel discussion along with our workshops. Our deal flow is pretty selective, so we reached over 69,000 companies. And as you can see, at the end of the process, we really onboard just about a couple hundreds. So the selection process really is, as we want to be a long-term partner, want to make sure that everything, all of the blocks fit and there is trust, but also value that is seen within our ecosystem. And we also see within the startup that we engage with. And this is a little bit of the overview of the events that we've hosted throughout last year. Now I'll hand it over to Karandeep to kick it off with the event.
Thanks a lot, Jessica. Okay, well, next up, I would like to welcome our moderator for today's panel, VIVIAN QU, Chairman and CPO of Aura Mass, and also CEO at VIAX. So over to you, Vivian. I hope I have Vivian here. Yes, there she is.
Hi, everyone, and thank you, Karandeep. It's really a pleasure to be here today with our esteemed panelists on the virtual panel. Happy Thursday. My personal background is in material science and research, and as both a Berkeley grad and a young person, care a lot about both sustainability and as well as and companies in our daily lives and their missions and impact to the societal stakeholders, which currently truly will more and more include everyone. So in terms of impact investing and social impact investing, I'm sure everybody knows that it's been a very rapidly growing field in the past few years. And even with COVID, the growth has continued in 2020. And increasingly, more and more VCs are interested in the long-term impact of the teams and companies they support. So today we have the opportunity to talk to some of the important stakeholders and thought leaders, both obviously the entrepreneurs who will be presenting, as well as the investors in sort of their investment thesis and how they approach impact investing. So that brings us into our panelists. We'd like to give each panelist 2 minutes to give a brief background on sort of who they are, how did they get to where they are, what they're passionate about, and kind of what their North Star is currently. I'd like to hand this off to Rebecca.
Thanks so much, Vivian. It's great to be here and be part of this awesome event. So my name is Rebecca. I'm an impact investor at Schmidt Futures. Schmidt Futures is a venture facility for public benefit established by Wendy and Eric Schmidt. Our North Star is to essentially focus on 2 things. One is providing talent and deploying talent into impactful ventures. And so a couple of our programs strive to do that. So we recruit and train a cohort of product managers to be deployed into non-governmental organizations, as well as other impact startups. And we also have a number of other talent engines, including our Entrepreneurs in Residence program to train the next generation of social impact entrepreneurs. We also have an investment part of our program, which includes nonprofit and for-profit investments into impact areas. And our portfolio areas include shared prosperity, tech and society, as well as science. So I come from Schmidt Futures from a background of venture capital. I invested in startups across Europe as well as the US, most recently at a female-founded firm based in the Bay Area called Aspect Ventures, where we invested across technology, but actually a big part of our portfolio and a big part of our thesis was investing in and supporting underrepresented founders, especially female founders. And so super excited to be here and talk more about Schmidt Futures, venture capital, and the evolving landscape of social impact.
Cool, thanks, Rebecca. I'd like to turn the mic over to Tamar.
Hello, everyone. Thank you, Vivian. My name is TAMER. I am the founder of Deep Tech Impact Fund, a first deep tech fund incepted for the benefit of the African region and Middle East, North Africa. Background-wise, I have probably 10 plus years in venture capital, corporate finance, equities, bond trading and private equity. So very heavy finance background. I've been doing deep tech investing in the Middle East and North Africa now for about last 7 years or so. I've been obviously working all the way through from Morocco all the way down to Saudi Arabia. So I bring very diversified background in emerging markets and working in this space. And our hope is that by incepting this first deep tech fund, we will be able to tap into deep tech companies, or tough tech companies as they call it in the US, with heavy intellectual patent background, and transition them and open markets for them into the African continent as well as Middle East or North Africa. So it's a pleasure seeing everyone. I look forward to participating in the panel.
Cool, thank you, Tamar. So that leads us to our third panelist, Chris.
My name is Chris Foltz. I'm the Vice President of Global Reach with Sensi Media Group. We are the preeminent media company that faces the cannabis industry. We focus on cannabis lifestyle and all the component attributes to that, events, and some of the most exciting magazines I've seen in the industry. My background in the social enterprise space is I would call it somewhat unique. You know, I started in politics, worked all the way up in the Republican Party, and then somewhere along the way decided to become a drug addict. Started over with nothing, was homeless, and literally, I can't begin to tell you of all the things in my life. Being a Republican strategist was actually harder to start over from than actually being a drug addict. So I started over with nothing, got involved in the cannabis industry because I noticed a gap, a tremendous gap in social enterprise. And I've moved all various positions around there until I found my home with Sensi Media Group. And we're right in the middle of the industry, the fastest growing industry outside of the tech space. And, generally our purpose is very clear. We like to build community. We like to build community by building a trusted audience. And more importantly, to the world, we want to present real, authentic information and stories that touches the lives of people. So people understand the cannabis industry is much more than, hippies smoking pot in the 70s. Nowadays we're talking about cannabis lifestyle and everything involved with it. And I couldn't be more happy to represent and be on the panel with all of you great leaders in industry. So thank you.
Awesome. Thanks, Chris. And last but certainly not least, Ryan, joining us from Halcyon.
Yeah, thanks. My name is Ryan Ross. I'm the Chief Innovation Officer at Halcyon, coming to you from beautiful DC. It's actually quite nice outside today for those who are in the city. Bit of background, Halcyon is a nonprofit. We support early stage social entrepreneurs through kind of a world-class incubator that we've built. It's physically based at Halcyon. It's this gigantic historic home in Georgetown in Washington, D.C. And we've also had the opportunity to work with a number of other ventures across the world, across the ecosystem. But we're very keen on working with early stage founders and having as high a marginal impact on their journey as possible. So we like to go really early. We like to take very early bets before others would. And then we also have I wouldn't say dipped our toes. I think we're like, most of the way into the water on a lot of impact investing work. And we've recently actually launched Halcyon Angels, which is an impact investment network for angel investors in Washington, D.C. We actually have a meeting coming up later tonight to look at a few more incredible founders. So very excited to talk about social impact and very excited for the discussion today.
Cool. Awesome. In prepping for this panel moderation, I learned a lot about everybody's background. And I think the theme of today is revolved around how to make social impact work for everyone, because obviously social impact investing is very inclusive, right? The stakeholders are obviously the investors, the entrepreneurs, but the entire point is to how does it create impact for the customer base and the rest of society. So I think the panelists here kind of give a very unique, different backgrounds as well as different geographies towards impact investing and different theses and focuses. So one thing I wanted to sort of start with which is open to everybody on the panel, is obviously COVID has been an extremely challenging year for some of the most disenfranchised in our communities. So kind of wondering, it kind of elucidated this huge disparity between the already kind of ultra rich and the disenfranchised. How has this impacted or elucidated, the investors' view on the future of social impact investing? So we can start with Ryan.
Yeah, I mean, again, I think that if anything, what like the two major things we're probably seeing with COVID are, number one, in terms of looking kind of longer term, it's accelerated the trends that you would see normally happening in society that might be going slower are happening a lot faster, right? I think as a very tangible example for everyone, we've gotten a lot more comfortable with using certain technologies to work in a remote fashion, all these different things. So it was accelerated a lot of trends, and as you are pointing out, it accelerated a lot of the inequity that we had seen kind of structurally built into the system. The interest in kind of, or perhaps the greater acceptance among a consumer base of using technology, plus exacerbating pain points that a lot of social entrepreneurs are already facing. For me, 2020 was actually the silver lining is that we're going to look back on it and see it as a watershed year for when people began to really align their investing with their values. And I think that there's tremendous opportunity. I mean, when you see a widening pain point, I see a widening opportunity for entrepreneurs to come in and solve a lot of problems. And we've seen that with a lot of our founders as well. For as much as this environment was tremendously challenging for a number of startups who had relied on a lot of kind of physical and in-person, kind of components to their model, it's also been, people have been accelerating at such a rapid pace over the past 12 months because, again, these pain points are getting so extreme, it really necessitates solutions coming in. And that's where I think startups are really primed to take advantage. So I actually see this as, being in a kind of medium-term sense, a really big push forward in this space, and I'm excited to see, over the next year to make sure that the kind of the funding and dollars really back that up.
Awesome. Thanks, Ryan. Rebecca, we had a conversation about this, so can you speak on this topic as well?
Sure. So I think there's a bit of a fallacy that technology funding is proportionately affecting and proportionately improving the lives of everyone. We saw a huge surge in specific impact funding areas like ed tech or fintech or health tech this year. I think that it's sort of whet the appetite for not just traditional venture investors or tech folks in the tech community, but also generally the public, of the value of technology in disrupting each of these industries. But if you look at the specific dollars, where the dollars are going, a lot of them are going to later stage startups to scale their platforms. If you look at ed tech, for instance, a lot of the funding is actually concentrated to MOOCs that are specifically targeting specific populations that already use or have access to online course learning. If you look at fintech, for instance, a lot of that was used to scale a lot of later stage, personal finance apps or neobanks, which again are specifically hopefully later scaling to underserved populations, but as of today, mainly focusing on serving millennials or people with privileged access. And so I think that on the one hand, you have the silver lining of people accepting technology as a sort of a force driver across all these industries. But on the other hand, it also, as Ryan said, kind of showcases the inequities across different populations. And so, I think hopefully, with the rise in funding and with the rise in an understanding of social impact as a huge and important parameter for investment, we'll start to see social impact investors and venture philanthropists start to fund ideas that specifically target underserved populations. So a good example is, across COVID with the distribution of PPP loans, there was actually, I think, a dearth of funding given to Black and Latino business owners who specifically actually get a lot of their services through their CDFIs, and so there are not enough technology and technology services actually that help as well as provide distribution and access to CDFIs, and so sort of the capillary system has actually been not as well capitalized with the venture capital system. I think with ed tech, for instance, you see again a lot of ed tech investors putting money into these large scaled platforms, but school teachers and community college teachers are neglected in terms of the technological platforms that they can use. And so there needs to be innovation to serve across all types of populations, not just those that are privy to tech at this day and age. So I think there's a silver lining of tech kind of disrupting all industries, especially those that are impact oriented, but hopefully social impact investors will step up and start to target and put their money towards underserved populations with specific products that are targeted towards those populations.
Cool. Thank you, Rebecca. And I think, Tamar, you have an interesting and unique perspective on this as well, being where you are.
Yeah, so I believe that the region here and the African continent in general is seeing similar phenomena as the US and the Western Hemisphere are currently looking at. So what happened is we have a time bomb ticking on this part of the world. You got a African continent, 1.26 billion people. Median age is about 18. The MENA region, Middle East, North African region, looking at close to 600 million people with a median age of 26. So with such resources underhand, it's becoming very, I would say, urgent for the governments to take a different approach. And I think they took notice probably pre-COVID, but the COVID situation accelerated impact investing in a way that I have never seen before in the last 10 years since I've been here. So local governments in the MENA region have pumped close to, just last year, close to an aggregate of $700 million in venture capital asset class. There was about $2.4 billion in transactions between private equity and venture capital in the African continent. So, and most of these are going to essential services, especially services that were underserved pre-COVID, and now they're looking at it very, very heavily, such as e-commerce, fintech, easy pay, go pay as they call it. Some of the main areas that have been neglected from a service perspective. So it has accelerated in ways that we've never seen. COVID has accelerated the funding to entrepreneurs and founders like we've never seen it before in the region. Now, I think it's very positive, but again, with a lot of traction until we catch up to the US and European continent.
Awesome. That's really interesting that emerging markets are, where the technology can reach the fastest and make the biggest impact. So Chris, a little bit twist on this question for you as a, operator and a continuous self-starter. You're obviously very in tune with both the customers of the media group and also the investors and stakeholders. So how have you seen, those perspectives, the investor groups that you work with, the audiences transform over the past few years in terms of social impact investing? Yeah.
It's interesting in the cannabis arena, I think a lot of people don't realize how much the cannabis world plays a role on daily life. In states that have legalized it, even to some extent in the medical capacities, that money in the tax base is going towards education programs. Some of it's going towards bringing in new programs, like right now, for instance, with a lot of upgrades needed in some school districts across the country. A lot of the cannabis money could be going and being spent on that. But there's been a challenge in the cannabis world in terms of how things work in a nonprofit capacity, at the same time as not having enough social enterprise in an industry that actually lives social enterprises, but doesn't realize it all the way. A lot of people that are nonprofits are afraid that, hey, listen, if we take donations in from the cannabis world, even if it's for developing an education program or to offset an expense where maybe government can't pick up the dime, that they may lose their 501c3 status. They may be put in jeopardy because cannabis isn't completely legal. It's still a scheduled drug as a controlled substance in America, with the exception of hemp and CBD. So what you're finding is, where it was an industry that the investors came in, hey, listen, I want to be part of this quick money-making grab. You're starting to see the investors stay in focusing on that long-term social impact that can be made from the industry. In Sensi, as a brand, we had to make a tough decision. As the pandemic reared in, March of this past year, we make print publications all over the country. We win awards for this stuff. But at the same time, our clients are paying for advertising. We know the world's not going to see it enough. Our investors are due the responsibility that we have to bring profit to the table. But how do we go about this? So the decision that we made was we were going to hold off on printing, and we weren't going to bill our clients. We weren't going to bill our clients because that money that they had that would go towards advertisement with us could better help them in the community be socially impactful, keep their brands afloat. This was before cannabis was even deemed an essential business. So it's about brands in our industry talking to the investors and saying, hey, listen, social enterprise and the approach of this is showing how it makes an impact in all these other industries. And since we have a challenge of just corporate donations here, let's get together as brands in this industry and figure out how we can solve some of the problems. How can we take some of our industry money and put it towards what Rebecca's bringing up, bring some of that technology over to Africa and some of these areas, because we have this money, okay? And that's what, when it boils down to it, it's about taking potential energy and turning it into something kinetic and changing the landscape of how our investors look at this get-rich-quick industry and focus on that social impact this industry will make in perpetuity.
Awesome. Thanks, Chris. And that brings up a really good point, which is, and Ryan and I spoke about this, which is increasingly companies that have mission-driven bottom lines in addition to their growth-driven bottom lines do much better. We can sort of see that in a lot of different brands in the modern era. So I was just wondering, obviously for our audience, there's a lot of founders here, as investors and people who are operators in the space, each of the panelists, as sort of either your investor or when you help connect startups to investors and evaluate startups through an investor's lens, how do you kind of judge and invest in the companies and teams that you come across? And we can start with, let's go first. TAMER, would you like to go first?
Yeah, I knew I would be first. I kind of felt it. So, I mean, it really depends on the strategy of every platform, right? There's not a copy-paste approach to this. But for us as a deep tech or a tough tech impact fund, we tend to look heavily on the intellectual patent portfolio of the particular startup and the teams, the scientific as well as the business elements of the team. This, as we invest in early stage startups, this tends to be our intangible assets that we look at and tend to weigh heavily towards our decision making. We also look at MVPs or minimal viability. This is definitely a plus if we are able to have a startup secure at least some sort of an industry engagement or strategic engagement with partnerships in the industry. This is a good indication also of a positive way forward with investing in that particular startup. So there's a few elements that we tend to look at, but there's, mostly we tend to neglect a lot the financial forecasting and DCF calculations that these startups and founders do, because to be honest, we've been doing this for 10 years and none of it comes alive or comes to reality. So we discount heavily these the financial elements of whatever we're provided with. But again, our core approach is to look at the intangibles at such an early stage.
Okay, thank you. And we'll move over to Ryan. Can you tell us a little bit about your experience?
Yeah. There's a lot to dive into here because, listen, at the end of the day, you said something and, I believe it, right? I believe that over time, we're really going to see that impact-driven companies can outperform. The data is mixed on it right now. It's not kind of clear one way or another. It depends a lot on how you define impact and what stage of companies you're looking at. With all that said, a few different things. Rebecca brought up what I thought was an excellent point. And it ties a lot, I think, also to what Chris is saying, which is when we're talking about impact, a large percentage, like sure, you can look at, and we certainly do, what is the direct impact of your product or service? I think it's incredibly important, right? So you're in healthcare, hey, we're saving lives. That's great. When you're in certain industries, healthcare, education, and probably as two of the top ones, there's a default like, hey, if we're helping children learn, that's just an inherently good thing. Yeah, that's great. What is the equitable distribution of who gets access to those opportunities, and how are you intentionally building towards that? So this is, especially for people in healthcare. Healthcare, by the way, the plurality of the ventures that we see at Halcyon and education. It's not just enough to say we help people or we benefit someone's life, right? It's the intentionality around who gets access to those opportunities, because what ends up happening, I think, and it in many ways is not necessarily ill-intentioned, but these technologies are deployed. Again, I think Rebecca did a great job of describing this. And then guess who gets to take advantage of, hey, this great innovation we've made in the ed tech space? Well, it's people who have easy access to computers, right? And guess what? There's huge disparities in terms of internet access in our country, right? And so these types of things can be exacerbated in many ways, and then of course is really counterintuitive for what an entrepreneur is trying to do. So my advice to an entrepreneur is, number one, be very kind of thoughtful and intentional about the impact, interrogate it. I think a lot of people just take it on face value. Oh, healthcare, well, I'm having impact. Intentionality is incredibly important for us. An early stage venture is going to pivot and change many, many times. So I want to really understand what's your North Star, like what are you trying to optimize for? So when you're doing something different in 2 years, because that's how a startup works, is that still going to be focused on the same impact-oriented goals? Or are you going to water that down in the service of some more kind of short-term growth-oriented strategy? So these are the types of things that we're looking at Halcyon to really evaluate there. I think the equity piece is such an important, probably under discussed aspect of this. Who gets access to your product? Who gets access to your opportunity? And how are you intentionally kind of building the company? And most importantly, within that, measuring towards that. Because if you're not measuring and you don't come to us with kind of a clear case of like, here's some of the metrics that we're looking at in terms of how we're validating that this is having impact, then it's just a nice talking point. It's not real.
Thank you, Ryan. Rebecca, you and I spoke about the slight difference in VC impact investing and venture philanthropy. As we know, Eric Schmidt Futures previous focus was a little bit more on philanthropy side. So can you step in and talk a little bit about the nuanced differences between maybe the two?
Yeah, absolutely. So I think we're in a, I personally, as part of Schmidt Futures, I'm in a privileged position to really focus on impact first. I think a lot of impact investors, previously in my past venture capital roles also focused on impact by investing in digital health, financial inclusion, but we were still returns focused. And I would say that, at this current, at this current role within Schmidt Futures, again, I have the privilege of really focusing on impact first. So if you look at traditional venture philanthropy models that have been successful in the past few years, a lot of them are actually very theme focused. So a great example is the Cystic Fibrosis Foundation, which obviously the motive is to improve the lives and improve access to treatments for patients of cystic fibrosis. And so because they're able to have a very specific value add of having access to patient networks, patient advocacy groups within cystic fibrosis, also have scientists who really understand the different drug pipelines that are coming through, they had a very specific role to play. And so as you're starting to see success stories like from CFF, you expand it to other types of industries, and also generally how do philanthropies and how do foundations play in the space. I think it distills into, we need to be very thesis focused. And so here at Schmidt Futures, I would say there are two sort of parameters or lenses by which we try to be impactful. So the first is, how do we expand the definition of entrepreneur? So, we've seen, I think, success stories of something like female founders. The percentage of female founders that the VC funding has doubled in the last 10 years. Same with Black and Latino founders, underrepresented minorities. And that's great because we also see the returns kind of proportional to that. Female founders also generate, amazing returns. And so, how do we expand that definition? So for us, it's about looking into underrepresented networks, maybe founders or professors or researchers from universities that don't have ties to existing networks of VC. Maybe it is educators or folks with lived experience who are not necessarily plugged into the self-reinforcing networks of Silicon Valley, but actually have a very, very specific idea that they have and a lived experience that shows that they understand the space really well. And so that's the first is really, as a venture philanthropist, how do we, because we don't really care about the sort of CAC, our customer acquisition costs of finding these founders, we're able to actually go and try to find these underrepresented founders. The other, as I mentioned, we are very thesis driven. And so, for us, we try to find companies that both democratize access to and rebuild communities for underserved populations. And so within the verticals that we're playing in, for example, health tech or fintech, we specifically go and we try to find those populations that are not currently being served, again, by today's fintech or health tech products. And so, Ryan alluded to this earlier of, again, there's not equitable distribution of products that are being funded by traditional investors. And so we actually go and we try to find those specific ideas, those specific gaps. And then we look at not just the scale of the product, but also the impact per user. And so by being thesis driven, we hope to attract kind of entrepreneurs who are specifically tackling those problems.
Awesome. Thanks, Rebecca. And that's a great leeway to Chris's experience. He's had a lot of experience and a lot of himself, as well as sort of polling others and helping others in the community. So wondering for you, Chris, how do you sort of see, in your role, continue to grow that impact, and what are you passionate about for the next few years at Sensi?
It's always an honor to be on a panel with such amazing people here, and just listening to everyone. We all in society spend so much time talking about what makes us different. And, when we take a step back and figure out what makes us the same, like we're all doing right now, it's so powerful. And I learned from a great lawyer in Chicago, Mark J. Lane. He is very instrumental at writing a lot of the laws pertaining to low profit, limited liability corporations, benefit corporations, some of the functional statutory structures that are used in social enterprise. And, I'm fairly hard-headed, and I'm really big into the philanthropy world. I like qualitative and quantitative outcomes from philanthropy. But he said, Chris, listen, the difference between a nonprofit and, let's say, a social enterprise is that you have to have the quantitative outcomes and profit as well. Because, in order for you to continue on the sustainability of the brand, you have to allow for that. Now, the beauty of social enterprise is that you're able to put your social mission to the forefront. Now, to Ryan's point, I think in the cannabis industry, you have a lot of people that are out here that are brand new. Our industry is so progressive, right? So every nuance, brand new, nouveau way of giving back, it's talked about in our industry, but there's not necessarily a structure. There's not a form that gets filled out each year where we're able to judge evidence of outcomes. And that's what I love about social enterprise as a statutory provision. Even things like B Corp, which is a private sector certification, if you will, onto social enterprise brands. Each year, you're required to put down on paper, more or less, this is what I did to justify my mission. This is what I did to make impact. This is how many, just like as Rebecca brought up, this is how much impact happens at a case-by-case individual basis. And when you have that kind of reporting, when you bring that to the forefront, it's not a matter of subjective opinion. It's about objective results and outcomes. And you see, that is the most, need I say it, sexy thing for investors these days, is seeing evidence of outcome that changes the world. It's very easy to be number one in your industry nowadays. People just spawn off new industries, but changing an industry forever, that's what's sexy. And I'm very, very thankful to be the first person from cannabis and publishing to represent Sensi magazine on the Institute of Real Growth IRG 100 this year, which is, like the top 100 or so CMOs and growth leaders for large brands. So you have all the Fortune 100s represented there. And then Sensi magazine, this media company from the cannabis world. And I've learned more about what's called humanized growth in this last year, working with such amazing people, that I'm happy to see around the world that stakeholder philosophy is moving to the forefront, which makes our jobs easier to implement both our social missions and our profitability, because our investors understand that stakeholders win. It's not just about selling squares on paper. It's about experience and impact. And that's what Sensi Media Group's all about.
Awesome. Thank you, Chris. So with the privilege of being an entrepreneur on the panel, I get to ask some of the questions that I think the entrepreneurs are curious about. So going through our investors, what is your focus, not for the long term, but what are the single missions or types of companies you guys are looking for in the very short term? So I think that might be of interest to our founders on the panel. So we can start with you, Ryan. So
yeah, I mean, sure. Yeah, we're pretty agnostic on sector. We invest across impact sectors. Maybe a slight deviation on the question then that would be helpful for founders. I think one thing we see with a lot of social entrepreneurs, and so like kind of one way to answer your question, a little tongue in cheek, is we're looking for companies that are going to grow really big, right? And I think that a lot of founders, especially first-time founders, don't realize kind of like the economics that an investor's looking at when they're looking at your company. I have a lot of founders who will go in, they'll go through their financial model and they'll have a very conservative projection. In year 5, we're going to be pulling in, $500K in revenue. And it's like, that's great. You're not going to get venture money for that idea. And I think a lot of founders is just not as intuitive as to why that is. The quick summation is for venture style funding, which, by the way, is a small slice of funding. So it's not everything. I think we put it on a pedestal in the startup scene, like, oh, you have to go through venture financing to be a real startup. That's a particular type of growth startup. But if you are on that track, you need to be making a lot of money and probably relatively quickly after you raise financing. So what are the type of assumptions that you need to make? How do you shift your model? How are you building into a really large market where there's a customer with a big pain point that they want to pay for this? And how do you begin to de-risk that hypothesis as much as possible? And I think also I say growth companies because we have a lot of social enterprises who will initially come to us, and the problem is to be perfectly honest, they're not thinking big enough. And I think maybe that's connected to the fact that social entrepreneurs are a humble breed by nature, and I think that's a good thing overall. And so we often have to be the champion on their sideline saying, no, think a little bit bigger than you are right now, because the problem and the scale of what we need to solve that problem is a lot larger. And so that would be kind of like a general nugget for the types of ventures and also a piece of advice for the founders out there.
Awesome. Tamar?
Well, our fund is focused mainly on solving major problems and real-time problems in our region. So I can't begin to describe the problems we're having here, but we have problems ranging from overpopulation in urban centers, climate change issues, lack of biodiversity, adequate waste management, food security, water scarcity, air pollution, you name it, we have it. So it could go on and on and on. So essentially our theme or our investment approach is to essentially focus on 4 elements with their subsectors of investments. So essentially anything that falls within the food and water security theme, environment, energy and renewables, digital healthcare, and big data, essentially, or the Internet of Things as commonly known today. And the reason why we picked those 4 themes with all the subsectors under them that falls is because they address these issues, these challenges that I mentioned earlier. We have off-grid towns or urban or outside cities that are till today, believe it or not, don't have electricity. They don't have clean water. So essentially we need technology to address these issues, and we need technology that can be implemented on an off-grid scale to ascertain to probably at a small town of 100,000 plus people. So our challenges here are a bit different from the US since obviously the US tend to enjoy a very strong infrastructure, but essentially what we're trying to do is debunk or address these challenges through technologies that are addressing real-time issues.
Thank you. And Rebecca, what would be like the media focus, something that would just make your eyes shine if a team came out through the door?
So I sort of talked a little bit about my thesis earlier in terms of rebuilding communities and democratizing opportunities. I think what I mean specifically by that is, areas that I think are both underfunded from an early stage innovation perspective, as well as companies that generally have, the burden of requiring some capital and time to de-risk their product. So, due to long customer cycles or kind of razor thin margin customers, they usually have some problems with raising the right capital to achieve the time-weighted returns for traditional VCs. So within education tech or health tech, I think this is pretty clear. So the 5 verticals that we do invest in, and this is not just specific to those 5 verticals, but I say this as sort of directional thesis. So education tech is obviously one of them across K through 12 or workforce preparedness, financial inclusion, so kind of different ways of labor force capital and wealth accumulation across different types of populations. There is health tech, so specifically the care economy towards underserved populations like special needs or elderly or foster care. There's what we call civic tech or justice tech. So specifically, oftentimes these are nonprofits that try to solve the problems of recidivism reduction or other types of, kind of closing the gap in inequities between different populations. And then finally, we invest in sort of public interest tech or civic tech. So technology that both increases the engagement of civic populations as well as provides public infrastructure. So whether it be transportation or other tools that can increase kind of public benefit. So within those 5 areas, I'm eager to talk to any startups that are innovating, but I think specifically, like I said, with the lens of serving communities that are historically underserved.
With eye on time, I want to make sure that we get to some Q&As. So this is like the last 2 questions, which I kind of somewhat combined for each of our speakers, panelists. What is in your view, the greatest accomplishment of your organization in the past 5 years? I think it's very helpful for folks who are listening in to sort of, get a view of, what your past focus is and kind of, how that's oriented you guys. And the second, and I think the more important thing is, what would you have told your 18-year-old self if they were 18 years old today in 2021? So can start with Chris.
Yeah, I think interesting question. As a brand, we made a dramatic pivot, right? Of an actual paper magazine that's distributed all over the country in all these different markets in a heavily regulated industry was a heck of an accomplishment. We won basically every award you can win for being a publication in our industry. And then here comes the pandemic, 2020. And, we were not positioned. We had web assets, but we were not set up the same way that we were with our physical publication. So we took a risk, and that's the advice I can give people. You know, it's okay to take a risk. It's okay to fail. Okay. You want to fail fast. You want to learn, but nothing great has ever happened by avoiding failure. Okay. It's the fear of failure that'll stop us. So we took a risk. We went digital with intentions to go back into print where prudent. And you know, there was one period of time, and of course, this is underneath the department that I help run. You know, where we were off Google for a while. I mean, we just disappeared for a month, and I'm sitting here, and I have my head in my head, and I'm like, you know, are we going to let people down because we took a risk? But you see, our clients take risk every single day, right? They take a risk for everything that they're doing. And we wanted to take a risk for them, and it paid off. You know, we moved more than nearly 2 million positions in Alexa. You know, we're the fastest growing numbers in the cannabis industry in the digital space. And it's because we took that risk. Now, if I'm looking at 18-year-old Chris Foltz, at 18 years old, I didn't have the normal 18-year-old life. I was working in George W. Bush's campaign at 19. So, you know, when you start life in politics, you have a jaded perception of reality. And I was in ideological politics, and I wasn't even ideological. And the advice I'd give myself is, you know what, Chris, when you become 39, what you are today, if you're not president of the United States, it's okay. It really is okay. I thought I'd be governor of Illinois. I thought I'd run for political office, but you know what I'm more proud of is starting over with nothing and being on a panel with people like all of you. So that's my president of the United States. So thank you all, and I appreciate it.
So before we move to the other founders, audience, feel free to input Q&As, first time using the feature, but I sort of see on the side now, and we'll accommodate the questions for the panelists after they give their final answers. So feel free to input any questions you guys might have. So moving on to Tamar.
Well, I guess probably I want to say that probably the biggest accomplishment that I was a part of is to actually shed light on different type of investing in the region here. I mean, probably 10 years ago, nobody heard of deep tech investing or impact investing in general. Everybody was geared towards their favorite asset class, real estate. Throw your money in real estate and it'll bring money. And this is what the Middle East is known for. So you see a lot of the big towers in Dubai, where I'm at today, Burj Khalifa and so forth. This is where most of the money went. But today, luckily, because of efforts along with other like-minded individuals that I've been working with in the region, I think now today impact investing is very well known. People are taking recognition, and sovereign wealth funds in general tend to start looking heavily at investing in these types of platforms now, because they know that it's not sustainable investing in certain asset classes for a long time. So I believe things are shifting towards the positive indicator. What I would have told myself when I was 18, it's a good question, actually. Become an entrepreneur. I think that's what I would have told myself. Become an entrepreneur, and similar to what Chris said, probably fail once, fails twice, fail 3 times, who cares, right? Until I get it right and learn from it. And I regret not taking that leap at an earlier age.
Awesome, excellent. Rebecca, and also, sorry, before Rebecca, if you guys are inputting questions and want that directed to a specific panelist, please include that, or we'll make it open.
Yeah, I mean, I think, you know, at the risk of sounding trite, I am bullish on tech and AI. And I think that if I were an 18-year-old, I would spend my time learning, you know, brushing up on my technical skills. To be honest, you know, 10 years ago, Mark Andreessen said software is eating the world. Today, it has taken over the world. And if you look at even just smartphone adoption in the US in the last 10 years, it went from 30 to almost 90. And so now you start to see the adoption of mobile phones, tablets, as new forms of, you know, consuming information as well as communicating with each other. And this extends not just to consumer media, but also, like we discussed, to education tech, to health tech, et cetera. So, you know, I think beyond kind of entrepreneurship, which I'm also very bullish on, I think if I were 18, I would really be focusing my time on doing that. And I think that also dovetails into what I think has been a proud achievement of Schmidt Futures in the past 5 years. As an organization, we both make investments and we place talent. So we're a talent and investment engine. And so one big focus for us really has been applying AI and tech to slow moving industries. So like I mentioned, on the one hand, we place really great tech talent. So, recent grads, as well as folks who've been in the industry for a couple of years, to NGOs and impact startups, take their talents to places outside of Google and Facebook. And then on the other hand, we also have programs like our learning engineering program, which is targeted towards investing in interventions in K through 12 ed tech to essentially suss out interesting ways of actually changing the R&D landscape of education itself. So what we like to call kind of investing in learning science. And so this can be new ways of incentivizing teachers. This can be, applying certain types of incentives to parents and children in order to improve their kind of learning capabilities and learning behavior, things like that. So I think all that said, we hope to continue to invest our time both in talent and in interesting startups and NGOs within the tech space that impact all types of industries.
Awesome. Thank you, Rebecca. And last but not least, Ryan, I know your organization and yourself have taken different roles and now starting something new. So excited to hear about the last 5 years. And
yeah, listen, there have been a lot of big successes over the past 5 years, but the biggest one is that the fellows we worked with, 59% of the ventures have a woman as a founder or co-founder, and 69% have a founder of color. Because at the end of the day, and this kind of gets back to what I would say to my 18-year-old self is, how are you using your privilege to help others? And I think that more and more, you can't think about these things in separate boxes. That especially as a nonprofit, like it's not enough just to like, hey, we've got a venture that would have gone to Y Combinator. That's great, like sure, nice win. But what's really the delta there? What's the impact that you're having? Who are the founders that you're supporting? And if you look at any of the data in this space, in this sector, who gets access to opportunity and capital and resources, it's like white men, right? And so how are we shifting that and changing that narrative is, I think, just critically important. And that's the thing I'm most proud of is, the not just the success of the founders, but kind of the composition of the founders, who they are and their stories.
cool. Send this off to you guys and connect directly.
And we can also type answers in. So anyway, we'll just look in the Q&A. I'll start typing away over here.
Awesome. Well, thanks everybody, and congratulations on all the impact that you guys have been making. And thank you so much for being here today. Looking forward to the presentations. Thank you.
Thank you.
Thanks all.
Well, thank you. Thank you so much, Vivian. And of course, the panel as well. On behalf of all our guests today, we sincerely thank and appreciate all of our wonderful insights and perspectives that were shared by our panelists today.